Shannon from alphatrends.net. Today is Friday, the 11th of November, 2022, and we had a pretty rough week for the bulls in the equities. The S&P lost about 2%, Nasdaq 3. Russell 2000 bucked the trend a little bit, but still down close to 10% year to date. And as we know, that's been an area of bigger weakness and breaking down. Semiconductors down. The standouts were, of course, oil stocks, and the volatility index, as well as the financials were up slightly. So let's take a look at the damage here. Here's the weekly chart of the S&P 500. It's looking pretty ugly. You know, when we take some volume weighted average price levels and anchor them off of these prior lows, and significant lows, that is, we can go back to, for instance, this one or this one, and those seem like they're ready to get tested. We've got the 20 and 30 and 40 week moving average kind of rolling over here. Bringing it over to the daily time frame, we've had a lot of volatility. We've seen these two big days right here that were up against the declining 50-day moving average, and the entire time we saw the 20-day moving average was declining. And as I always repeat, when we have a 20 and a 50-day moving average that are declining, it's not a good time to buy stocks that you can't trust the rally attempts. And after the Federal Reserve, we saw, of course, that sellers came in, or the CPI rather, and knocked it back down. And today the selling continued pretty aggressively, back below the volume weighted average price from the January 24th low, which means that the average participant from that time on the long side is losing money. The average short is making money. Now we're a little bit extended on the downside here, so it might be we get a flush, something like this, and then start to rally up, and then perhaps see the 5-day moving average come bear down, and we'll see further weakness. But for now, forgetting that we might see a rally, it's not something that I certainly would encourage anyone to trade on the long side, because we are guilty until proven innocent. And the trend, we've got a lot of risks here in the market. If we look at the Nasdaq, similar story. The weekly time frame looking pretty, starting to look ugly here. The volume weighted average price from the COVID low is way down here. We could take, I think we've looked at this one before, and that's where we found buyers last time. This time maybe we break down, undercut that little low, rally up a little bit, and then drop down. That would be a really nice pattern of lower highs and lower lows. Looks reasonable, especially based on some of the action in the individual names. AMD came right up to this prior support in the 50-day moving average and got hit hard. I talked about that on the Spaces on Thursday. Amazon not holding on to its gains for the most part, and then of course Google, which gapped way up, has been under pressure ever since that earnings report. Facebook continues to get slaughtered here. Looking at the volume weighted average price from the earnings report, it continues to tell you there's no reason to be a buyer. The 5-day moving average is still declining, as are all the longer term moving averages. It's just a broken stock. These stocks will have bounces, and some of these bounces will be seductive in that you want to get look like you want to get involved, similar to what Afrim did, where it bounced from 50 to 80, then they reported earnings and dropped back down to $46 per share. With a declining 20 and 50-day moving average, look at the rally attempts as guilty until proven innocent. If you're watching this on YouTube, please, if you like it, please mark it with a like, and make comments, etc. The Russell 2000, as mentioned, the volume weighted average price from the COVID low was hit in this market. Previously, we're stuck below this big prior band of support. So, a lot of distribution up here. It doesn't typically turn right around. What's most likely is what we're seeing, a rally on lighter volume, and then who knows, perhaps down there we might, at some point start to get out the Fibonacci tool to look for a 61.8% retracement, which would bring it way down here. That's not a realistic way to look at the market yet, because it's so far away. But looking to the daily time frame, there's nothing bullish going on here. Just because it was up this week doesn't mean it was bullish. We're still below, we still have a declining 20-day moving average, declining 50-day moving average. We're back below the year-to-date volume-weighted average price. It's just ugly action. Semiconductors did basically what I just pointed out on AMD, is that they came up to this prior band of support. That support became resistance, and we're back down below the year-to-date VWAP after getting smashed on big volume today. And we've got these volume-weighted average price levels in the semiconductors. This one's been hit a couple times, so perhaps we're headed back to 250. The volume weighted average price from the beginning of 2021 we've noted several times, and that looks like it's likely to be tested down at 430. That's only 10 points away. I mean, we can do that in a day very easily. So the market remains under a lot of pressure. The biotechs are down to the volume weighted average price from the January 24th low, but again, there's nothing bullish here. Declining 20-day moving average. This market rather, the biotechs were halted right at the year-to-date VWAP, and we're below declining 20-day, 50-day moving average as well. There's just nothing encouraging about this. In this market, maybe it does something like this, and then I think you could short it right here. Don't look to short it below this low. Instead, look for the little relief rally, and once that begins to roll over, short it with your stop somewhere up in here if you're looking for that type of exposure. Let's talk about Bitcoin for a moment. Bitcoin came up to an important level this week, and you can see it got rejected. That is the volume weighted average price from the second quarter high, as well as the all-time high in Bitcoin, as well as the volume weighted average price from last year's low. And those three things came together pretty much in the same area. I had pointed out with a tweet at about 44.5 that the risk was to the downside. Right now we're trying to find some buyers at the volume weighted average price from this most recent move. I think it's likely that maybe we do something like rally up a little bit from here, then make a come down towards the year-to-date volume-weighted average price and test that near the 40,000 level. So the financials, again, they were higher this week, and they're starting to chop in a much bigger range. If you're trading these things, they're back below the 5-day moving average. The 5-day moving average is rolled over. To me, that was your exit point if you were long. Now, if you're looking at this market, if it gets stuck below that 5-day moving average, then you're going to look for this market most likely to pull back down towards 39 and a quarter-ish or so at a minimum. Energy names, again, they were higher. They've been extended. They continue to be. Some of the individual names aren't quite as extended. And on Twitter today, I pointed out one of those names, which was, I'm trying to think of what it was, CNX. So there's still opportunities out there. CNX is it's an oil name. It's boring. It's slow, but it's working in this market. Today on Alpha Trends, we shorted Nike, and I tried to short Nike because to make a point too, that just because it's a name brand doesn't mean it's safe in this market. You look at the 20-day moving average, the stock can't close above it. It can't close above the year-to-date volume-weighted average price. The 50-day moving average is heading lower. It looks like it's most likely headed for at least a test of this volume-weighted average price, which is anchored to the VWAP from the handoff from the COVID low VWAP. So there's just a lot of risk still in this market, in the cryptos and in equities. Just don't be the person who's trying to buy the dip. I keep picking on PayPal because there's a reason to. It's a broken stock. A lot of people, I remember back in here, I was saying, don't buy it. It's below the 20 and 50-day moving average, and it's been cut almost in half since then. And now it's coming down all the way to the volume-weighted average price from their IPO in 2015. That might be a level where it finds a low, but right now there's zero evidence that the buyers are stepping in. Look at the volume weighted average price since that earnings report. Can't get above it. The sellers are in control. When these markets are trending lower, stop trying to buy them. You're going to lose your money.